Welcome to TradeTheMBI.com. This is John. This report is for the 25th. And here we had a little bit of a decline take place after the pop. Not too shocking because I'll just put it up real quick here, the 50K and our Power Mode 2 Opus 2 program. We talked about it where as we dipped to where the sell signal was, you needed to have the cyan move above. The green, it happened right over here as it was just taking place, and sure enough then it produced the sell signal, which in fact creates, let's go ahead and look at it, all-time highs for the program. So currently that's where it is, and then this goes back to February of a year ago, so just a year and a quarter. So we can look at the performance graph, all-time highs right there. And from a periodic return, so since the beginning of this year, that's where it's at. Percentage gain based off of last year's, obviously. Profitability, percentage-wise, barely winning 50% of the time. In some cases, not even winning 50% of the time, but the profit factor through the roof. And that's the most important thing. And that's just because we're following longer trends, cutting losses. I wouldn't say super efficiently, because we've seen that there are plenty of times where we can do it a little bit better than the program even can. And that's okay. Not worried about the idea is that we're understanding when things change. And this is interesting because I saw an article that began to just start to discuss these kinds of concepts. Here was the article. I'll put a link to it on the private Twitter feed as well as on the Skype chat. But a good one because it gives you a rough idea of some of the things that we attempt to look at within the algorithms, because it shows where the real money is, and the real money is institutions and how they're buying and selling, and it becomes far more important than any of this banter and talk you hear about other things. And of course, these institutions are very closely linking themselves to what they believe the Fed is going to do, and that's why the market does what it does, not because of someone's stochastics or something getting oversold in that. You have to go where the real money is. But that's a whole another story here. We can look at what our current readings are, and steel popping back up could see a little bit of resurgence from that little bit of sell-off. But until the cyan gets over the green, we're still in pretty decent shape as far as holding on. We knew we had the positive extreme from right over here on the breakout move that had to be retraced. So this is nothing special. It really doesn't warrant the excitement. The 50K knew what to do with it. That's why I posted when it had closed out for anyone who didn't have that information at their hand by not having the indicators, which just points out how important they are. It's good information to have. Likewise, NQ, we could see that there was a little bit of increase. It's a little bit tighter spread here, though it's going to take a little bit longer, I think, for the NQ to roll like the S&P, and I think it was the Dow that had the tightest configuration. When we look at the YM, you can see, yeah, so you'd already had the cyan above, which was triggering it, and when I say cyan above green is also above red and white, so it was a far bigger trigger, and we were coming off what we were looking for our short configuration at that particular spot, and sure enough, and I like it when they come to the open of these bars going across like that. A lot of times it takes a little bit longer for the wick of a candle like that, which would be this long blank space underneath it. Oops, don't want to click that. Just like that. And so it dropped right up to that. Perfect. No objections whatsoever. Caused a couple of people to step back. It was very interesting watching on the alert ones because a lot of them peaked out just as the 50K did. The 50K sold a little early, and you had this little continuing momentum. And a couple people said, well, it got up too soon. It's like, well, you're not worried about that because we're looking at catching the broader move. And then sure enough, it rolled over pretty quick. We weren't expecting anything from the euro, and we got exactly that. If anything, we're looking for a little bit more weakness from that right at the precipice here. But if that starts to roll over, then I would expect us to have to wait for the green to come back under to get any new buy setup configuration. No real shock with that. Flipping over to gold, we can see that it's maintaining that strong move going up there. Still potential for a little bit of weakness here if that steel dips below, but it's holding up quite nicely for the fact that it's in these positive extremes. You just have to wait for that beginning rollover, and then the cyan coming back above would be the time to expect that to take place. So we'll keep an eye out for that. TLT, actually a little bit of a surprise move on that one because this is expressing some weakness, but you broke into the new zone with the red here breaking over the previous high to turn that one around after the retest down there. So a little bit of fear from the market caused a nice little pop there. No impact on oil, still in a little bit more of a negative read at this particular point, but red is controlling here with it way above, and now you've got cyan potentially moving above the red. So the fact that you've got steel down here in the safety zone, added bonus to at least mean that you're not going to see some major decline, at least relative to the strength in there. You'd have to see a major spike back up of the steel, but a little bit of weakness built into that configuration. It's maybe a little consolidation from the recent move. AIG, even though it's pulling back to this positive extreme right here, still overriding. Long setup, be a good opportunity on a new dip of the green below the red as an opportunity to jump back in. Starting to get a little sideways here with X and the choppiness, just getting a series of spiders right around the zero area. Though this time you have cyan popping above, all you did was retrace the low on this positive extreme. Nothing too dramatic. Perfect from intraday view. Moving on to CLF. It formed a little bit of a spider as we just got a little bit flat. Still should be pretty decent on any dip back below. This is what I'd be looking for, is a green pivot back to the upside. Difficulty is you never got your steel to come underneath, and this is something we talked about just the other day. You're always looking for that steel to dip back down below, and then having your green crossover tends to give you your nice pushes. This looks to be more crossover, just straight across slide. Here you have WLT eased off a little bit as it started making lower peaks and then trailed off. It should produce a decent buy though, because again you have that steel down below, and when it turns around, but it's just begun the pullback on that. You got a bunch of positive extremes going all the way back over here. Got to keep an eye out for all of those. Let's just run the numbers from the radar screen. And I did have a good question about radar screen and adding the additional indicators. There was the change in the pink bar that I created that I talked about the other day that I will actually add to the workspace that we give out to indicator subscribers, because it just signals when well, you have the option of adjusting the inputs so that it'll only signal when a yellow comes, or you can add magenta, or you can add red or green trend change. So it gives you all the flexibility for picking exactly the right configuration. Very shortly I'll have also yellow candle when it's in deep red trend, which will be nice as well, because those are ones you have to pay a little more attention to. And also cyan candles, like we see from the daily, which very effective to have, because you could run that on a variety of stocks for a daily, and then like we do on the ES, running for our daily candles on the cyan, where we look for the next day to be a positive. Nice way to be able to look at those and have alerts just pop up, and you'd be able to get a screening of that, which that would be fun too. So Apple, again, we're just waiting for the turnaround now on this. So now it's looking very attractive here. We've got the steel underneath here. Did dip below the red line, so we expect that potentially we're going to have a little more time right at this low. We are in that deep red. It hasn't quite settled out, but now we're going to be looking for the first turn up of that. And so this is where I'd be watching my intraday alerts, because that will become very attractive from a buy setup. Keep that one in mind. Didn't really have any issues with where that went as far as the move, so that was pretty good. Amazon, we can see just going straight across here, nothing, not bearish either, because that's actually above with the greens, so no problem playing buy signals on that one. Baidu had been nice. We had that crossover even from the previous day. The momentum of that steel and green rising, it just propelled itself. You also got red moving up higher, and actually just look for it now to break up above this high for continuation, and cyan well below, so that should carry through to a whole nother run. Short got positive extreme. That's could take a while before that evens out. FAS is the one we were worried about on a rollover. Started intraday, gave the sell signal in that, and you can see when it rolled over. It's exactly what you got to watch this one now, because that little pincing move back to the center, and you're just flatlining on the red is the problem. You're not going to get any momentum out of that until that's clear over. And again, you have this positive extreme right here. That's just looking for a retrace, and so you can see the market kind of gravitating back to that mean of that breakout move. Seems pretty clear looking at it. It's the beauty of those positive extremes. Facebook, okay, just flatline, not expecting line, hasn't really deviated a whole lot from its range. Did get positive extreme on that little teeny pop. That's a concern when you have that kind of pop and sell. Time to take a couple of gains on that one. Google. Go to Google. Deep red had the nice little green, yellow buy signal from there. Still looks okay from that buy configuration at this particular point. You did get positive extremes, so as soon as that begins to see the cyan perk back up, I would expect that we're going to come back and retrace that low. Could happen quickly, it may take a day or two, but it will take place. Netflix, we just like that chart all the way. We even have the ABM on there nicely to show how it works. Did get positive extreme on just this little move. So now you got to watch here, because the pivot down coming in today would be lower green pivots. You're already below where your red is. So if that begins to roll over, you got to see cyan pop up to indicate that shorts are into the game. This particular point still looks pretty healthy. PCLN, it's been popping and gyrating, but we've been in this deep red, so nothing really of strength showing up in this move. In fact, potentially you've got a shot at it with the green popping back above, but again, still deep in the red. So as soon as that ends, or you get that green above there, we can cancel that out and begin to look for a new signal, but you really need to see that steel dip from underneath. Sort of like, it came over here when it first started with the potential of a buy, but we had the deep red beginning, so that didn't really help. You dip below the red line now. We've improved a lot, but just not seeing any action from it. And Tesla had the nice buy set up there. It scrolled up, still looks good. They had a little bit of the retrace. There's a lot of positive extremes there, but reality is with the steel and cyan that low, this should continue to move higher. So you take those dips from the intraday alerts and you buy them up. Twitter, likewise, it's just been a slow ascension of the red. The red's now finally started to move off. Now we were going to be looking for a breakout. We need to see a breakout move one way or another from either cyan or green to the upside here, and the first tick on that one is going to give us a broader indication of where it's going to go. For now, it's just supporting off of the ABM. And like I said before, I would be using purple as a stop point in between there. If we look at the daily MBI Opus, it's not going to have affected that, except for the fact that on this dip, we create another iron hawk. So now what that does is you've got the two positions going to average into that from a discount. So even a smaller increase now on that move for the ATR. So ATR from this one is all the way down to 12.5, and then previously it was right around the same. So that's all it's going to be looking for on an average between those two entries. So 43, and this one was at 49. So 6 point difference between the two. So it's not going to take much just to return back just above the highs. We'll probably sell it out for the gain on it. So worth noting on there. The difficulty with it is that also it will adjust the stop, whereas I would look at these as independent positions on that from a stop standpoint and have them separately. But either way is fine. It's still going to produce the right returns and numbers. No concern about that whatsoever. As always, though, continue to look for me in private Twitter feed, Stock Twits. Trade well. We'll talk to you tomorrow.